So once again, I'd like to thank you very much for coming to our financial reporting class. I think that we have covered quite a number of standards already. It's very important for the students to find time to go through these things. It's not easy for you to find time, but it is very important for you to find time. Financial reporting is involving, and it is going to be more involving when you get to advanced level. But if you have got a good foundation, I think that there's going to be some hope that you will do well and finish your programs early. Staying in the same place for a long time is not good. Today we want to focus on impairment of assets. Impairment of assets. And this particular discussion is a reality even in the business world, because what gives a business value? The demand by customers on its goods and services. That is what gives the business value. As a business person, you may get some loans, get some monies from third parties on account of the fact that your business is going to be operational. So that if there is COVID-19, again, COVID-19 has taken businesses out, and many people have lost their source of income. If there's something that happens to your market, that means that, or that entails rather, that you have less demand and you don't operate at a level where you're able to meet your obligations, impairment is going to set in. Do you know that? It is the same argument that you can put across. If, for instance, we stop demanding for goods as Africa from China, the machines that China is using to supply us with those goods will be impaired. So impairment is a reality. And in some cases, you find that if a rich person discovers that they're going down, and they're going down at a very fast pace, they may look for their gun to commit what? Suicide. Is there a good reason for someone to commit suicide? And the answer is no. But there's always a reason. In fact, when people go to a suicide scene, they have to look for a suicide note. Impairment is a reality. We need to grapple with it. So that's the reason why we bring it in the class for financial reporting. We are saying that it is not always true that assets will be losing value gradually. There will be a chance that an asset value may drop drastically, suddenly. That means that impairments are set in. For instance, if you have got your vehicle, and of course, if you don't overspeed like some of these men do, I think ladies don't do that. You don't experiment too much on the road. If a lady is driving a vehicle, it's going to last longer because they're extra careful. But men like overspeeding. If you're a man and you overspeed and your vehicle is involved in a road accident, it will be impaired. You can't continue depreciating it normally. Do you understand that? It will be impaired. You cannot continue saying, let us depreciate the vehicle when it is scrap value. So impairment is a reality. And the standard was a necessity. And we need to appreciate it. And we're going to go to some questions later on. So let's begin. Under our objective, and you don't have to write this one, you need to discuss how to identify and account for impairment loss in a single asset or a group of assets, which is referred to as a cash generating unit. A cash generating unit. Okay? So I'm going to try to be brief on the notes so that we can go straight to the questions. Excuse me. If I'm fast for you, you can always ask a question, but I'll try by all means to be as slow as I can. Although when you start getting tired, you forget that you're supposed to be slow. Okay? So let's begin. Here is the thrust of this particular class. And this is inspired by prudence concept. You remember, under the prudence concept, assets must never be what? Overstated. I hope that you are seeing what I'm trying to share. Assets should never be carried at an amount which is above what is known as their recoverable value. Assets should never be carried at an amount which is above their recoverable value. Okay? Now, let us get on to, let's say, a company or a subsidiary, for instance. A subsidiary in this case can be taken to be a cash generating what? Unit. Because in a subsidiary we do find different assets which are being used for one purpose. Of course, a business is an idea. One person said it's an integration of assets and liabilities, of course, done in such a way that you are able to generate a return. Okay? Now, if the assets value within your business exceeds the market value of the business, it means that your business is overstated. It means that your business is overstated. In other words, the market value of the business should always be what? Higher than the what? Than the current value of the separate assets that you have in your business. We have got several ways of valuing a company, and in financial management you will learn that one way in which we can value the company is by comparing the value of the net assets to the capitalization value. And anytime we find that the value of the net assets is beyond the capitalization value, then we know to say impairment has what? Set in. We must drop down to the capitalization what? Value, in order for us to value our business objectively. Now let us see if we can make some progress, because this is not supposed to be a very long discussion. Impairment is a fall in the value of an asset so that the recoverable amount is less than the current value. Whenever the recoverable amount of an asset is lower than the current value, then we have got impairment loss. Do you know what that means? It means that your asset is overstated. It means that your asset is overstated. Impairment has set in. Okay? Let's think about this computer. Let me talk about my computer here. If I'm valuing my computer, if I value my computer personally at 25,000, are you listening to what I'm saying? If my computer from my own records is valued at 25,000 and I go to the market and I find that a new computer is fetching at what? 10,000. It means that the value of my computer has been what? Impaired. Do you understand? Because the value of an old computer should not exceed the value of what? A new computer. This is what we're saying. This is what we're saying. You must drop down to the market what? Value. It is a reality, okay? Yeah, can we proceed? For instance, I'm not going away from the slide, all right? I'm just trying to give you more examples so that you don't say, I wasted my transport money. So, if, for instance, you fail to get money, you have got a receivable that is valued at, let's say, 10 million, right? Are you understanding? Yeah. And you hear that your client is no more. Are you listening? And that their business is what? Is down. That you know their business depended on that client's availability. Do you know that your receivable is going to be impaired with that client? Because now you're not going to receive anything from the client. The receivable in that case will be what? Impaired. There is actually impairment loss in receivables. You used to call it what? Bad debts. It's impairment loss at a high level of discussion. We have got what we call credit what? Losses. Do not continue expecting money from someone who has got no ability to give you. You need to write off. Why do we write off receivables? Because of impairment what? Loss. Very important point. Now let us see if we can make some progress, because we're not supposed to be on the theory part for so long. What is the recoverable amount? And there's a question for this one. This is the higher of two things. The fair value, which is the market price of an asset, less any costs, transaction costs. And then we also have to bring in value in what? Use, which is the value of the asset to the business. Now the question is, why the higher? Because you want to get maximum benefit from an asset, isn't it? Remember in inventory, if you still remember from financial accounting, we normally value stock at the lower, right? But in this case, what weight can you see there? Higher. You have to be in the detail. You have to be in the detail. If you're not in the detail, you're gone. Let's proceed. Impairment losses, once identified, must be written off to the statement of profit or loss. Must be written off to the statement of profit or loss. Must be written off to the statement of profit or loss. Therefore, impairment loss must be expensed. Last time somebody was busy asking, what does expensed mean? Should be put as an administration what? Expense. Should be treated rather as an administration expense. Okay? Alright. Are we together? Let's see. The statement there says IAS 36 does not apply to non-current investments, not assets. But have you seen the word investments? Held for sale. Okay, that is discussed under IFRS 5, because I think this one is likely to be dealt with under financial instruments. Now, I want us to proceed to the next part. At the end of an accounting period, you will need, as management, to make an assessment of impairment. Check your assets to see whether impairment has taken place. Check your key assets. And of course, you will need to have information. And we're going to discuss the internal and the external factors that can indicate to us that impairment has taken place. That can indicate to us that impairment has taken place. Right. So what are some of the things that shows us that impairment has taken place? We have got external indicators and what? And what? And internal indicators. Under external indicators, if there is a fall in the market value of, let's say, the vehicle that you have, all right, then it means that you have to reassess the value of your vehicle, especially if it is very old. There are some vehicles that have been revalued and revalued and revalued and revalued from zero to a number. It's very dangerous. Okay? That's why they like encouraging. If you are going to have a personal vehicle, don't lend it out anyhow. Don't give it out anyhow. Because you might be driving something that can be a death trap. You know what a death trap is? Yes. Next, we see also that impairment loss can be adduced externally through the external information when we look at changes in interest rates. Now this has to do with value in what? Use. I don't know if you remember the issue of discounting. Do you remember the issue of discounting? Those of you who have done business maths, there is such a thing as discounting. If you're going to use a discount factor that is higher to convert a future value into present value, the number that you're going to get for present value will be very low. So the argument is, whenever interest rates increase on the market, the value in use of your asset is going to be very low. And when interest rates reduce, the value in use might be high. It's very important for you to see that. These are external indicators. I'd like to throw in another external indicator that might be interesting. If you've been supplying one client, you see there are some businesses that are not well diversified. They are there to supply only one major client. Or indeed you may have even 5 of your major clients. And if those major clients cease operations, do you know that the machines that you have been using to service them will lose value? If your clients go out of business, then the machines that you've been using will lose what? Value. It's very important to see that. Zambia, for instance, is into the extraction of what? The copper ore. And we have continued to extract the copper ore as a nation because we feel that there will be international demand for copper. If international demand for copper drops, for whatever reason, you hope that World War III will not take place during your time. If it drops, what will happen? The machines that you've been using will lose what? Value. There will be impairment what? Loss. So indeed it is true that the loss of a key client can make your machines to lose value. It's very important for you to see that. Okay, let us proceed. This is not something that is a little bit far-fetched. Sometimes there is what we call change in government law. There was a time when the government of the Republic of Zambia, under the MMD government, decided to ban the production of alcohol sachets. And the owners of the machines, which were being used to manufacture those sachets, sued the state. They said that, what are we going to be using our machines for? There's a doctor who is on a march. He's marching to propose that the government bans the consumption of alcohol. From this class, we don't have wine beavers. What do you call them? Those who like sipping. When the wine is less, they even say, let us create a dish and mix. Now, I heard that Zambia Breweries was in the process of expanding its operations. When such things are happening, if there is going to be a drastic fall on the demand of alcohol products, the machines that Zambia Breweries is using might incur impairment loss. Do you understand that? It's very important for you to see that this is a practical topic. Don't say we are theorizing. We're not theorizing. We're not supposed to. It is just that, when we do our part as trainers and teachers, those of you who are supposed to create industries should go and take risks. And now the challenge that is there is that everybody wants to be a trainer and a teacher. That's the problem you have in this country. Internal indicators of impairment. Number one, obsolescence. This is a loss in value of an asset because of change in fashion, or the asset has been outdated. You understand that? And then there can be also what we call adverse changes. This can come as a result of damage to the asset. Give the asset, for instance, to an operator who has not been trained on how to use it. What will happen? There will be damage to the asset. And if the asset is damaged, you're not supposed to say, let us continue depreciating. You're supposed to bring in the concept of impairment loss. I wanted to just say this, that impairment loss is revaluation decrease. Did you hear what I said? Impairment loss is what? Revaluation decrease. For in revaluation decrease as well, there is a drop in the value of an asset. Drastic drop. One-off. So please let us remember those points, and I hope that there could be some more insights to that. Okay, so let us look at the words that we use. Recoverable amount is the higher of fair value, or indeed value not use. But what is fair value? Market price. You understand that? In reference to an active market. So please let us remember that. Fair value simply means market price. In the absence of market price, one can use best estimate. For under the standard fair value, there are three labels. Three label inputs that we use. Okay. Also include within your fair value cost to sell, include transaction costs such as legal costs. Cost to sell cannot include restructuring or reorganizing costs. And under fair value, we also ignore transport costs. Transport costs, there is an option, It's either the supplier provides the transport and increases the amount, or the customer can come to get the asset. You understand that? So it's very difficult for us to include transport cost within fair value measurement. We need to question that. Okay. I think I'm running out of energy. Can I proceed? This will be shared on our group. I want to encourage you to be taking down notes rather than all the points there. Value in use means the present value of an estimated future cash flows, or the estimated future cash flows, including estimated net disposal value. Now, when you buy your own van, for instance, do you know that you're going to have savings? in the sense that you don't have to hire somebody's van. It is possible for you to establish the value of savings that you have in 1 year. We can say that you are saving 50,000 kwacha every year because of having your own van. It could be more than that, right? We are just using that for argument's sake. Saving 50,000 kwacha or 100,000 kwacha every year because you've got your own van. And then you are going to use your van for 5 years, for instance. You can multiply the 100 by 5 and discount it to present day value. You might find that you are coming somewhere near to the cost of that van. If we discounted the 500,000 kwacha, maybe it might come to 200 or 150. When you compare that with how much you bought the van at, there will be a small difference. So it is true that value in use can be used to check the recoverable amount. Okay, so in our class, we are going to look at impairment loss at 2 stages: for a single asset and for a group of what? Assets, known as cash generating what? Units. There is business language, of course, here that the students will need to appreciate. We don't teach you how to memorize. That you need to remember, right? Yeah. I don't think that there's any intelligence we can talk about without memory. You know, the first thing that somebody loses when they go mad is memory. Memory is an asset. It's a serious asset. Now, impairment will take place on a single, on a single asset. When you find that there's a difference between the higher CV, when you find that the CV rather is higher than the recoverable amount, then you know to say there's been impairment loss on a single asset. Now, recoverable amount, we have talked about the higher what? Fair value less cost, or what? Value in use. Okay? Then we go to another level. Impairment at which level? A cash generating what? Unit. Now, what is a cash generating unit? This is the smallest group of assets that is capable of generating independent what? Cash flows. And I'll give it to you. The examples of cash generating units includes subsidiary. You know, in a subsidiary you have got different assets. In a plant, if you don't know what a plant is, you can think about those fellows who grind or turn grain into what? Into meal. You know that? They use different what? Assets. I think in some cases when you want breakfast, they'll have to peel off, right? They'll have to peel off the back of the grain. But if they want to grind, they'll have to use maybe a different what? Machine. But you discover that within that same, business, all the machines are being used for one reason: to generate a what? A return. But of course they're different, and they serve for one purpose, meaning that they're part of what is known as the cash generating what? Units. You can have a chain of stores and so on and so forth as part of your example of a cash generating unit. You can take down some notes. I've seen that you didn't write something there. Take down some notes. Take down notes. Very soon we'll be doing some questions, and let's take down some notes. Somebody suppose that it's making a lot of noise when we try to come out. Are you done? Are you done writing? All right, so I'd like us to make some progress. Okay. In impairment loss for a cash generating unit, you need to follow some steps in allocating the impairment loss to the different assets within a cash generating unit. The first thing that you may need to do is to identify the damaged assets. You understand that? This is very important. Then you get on to goodwill, which is an intangible asset. And then for the remaining assets, you can share the residue impairment on a pro rata basis using the values of the remaining assets. Okay? I've already stated there, do not impair current assets. Why? Because these current assets are likely to be recovered within one accounting period. So please take down some notes quickly so that when we begin to do the work, you are able to see how we are progressing. You are able to see how we are progressing. We are meeting again on Monday. I hope Monday is not a holiday. You live in a third world country that has got a lot of holidays on its calendar. All work and no play. Makes who? All work and no play. How true is that statement? Why should you be resting when things are not looking good? You should be like shouldn't you be like the young man who sang, "Get rich or die trying"? All right, so I told you to write notes or points. Let us look at these further aspects. Yes, is there a question? You can ask a question, or you still writing? Yes.
Just for a question.
Yeah. Yes, please, you can ask.
On the impairment.
Yes, please.
Goodwill. In the previous lesson, it said we amortize the goodwill.
No, we didn't say that. In fact, we had emphasized to say assets such as goodwill with a lifespan which is not finite. That's the word they use, finite. Should never be amortized, but should only be tested for impairment at least how many times in a year? Once, yes. It's a very important point or question that you have asked, because this particular question is normally seen in the exams. Is that okay? But why do I have a feeling that you're not attending to your private study? When do you want to start studying? Just because you think that December is not very far away from today. A little, pay for your exams. Then you will know that December is not what? Far away from here. Can we proceed? I'm now moving to the next one. Impairment loss should be charged as an expense. We have discussed this, right? For revalued assets, impairment loss should be charged against revaluation surplus to the extent of revaluation surplus, and any excess goes to the profit or loss. Now listen to this. Sometimes the asset that is being impaired could have been revalued upwards in the past. So what do? we should first reverse the revaluation surplus. You understand? And if there be any excess, we take the excess where? To the statement of profit or loss. So if you went up, let's think about land, and there's a question. If you went up in terms of your, land revaluation, if you went up by 10 and you go down by what, 15, you know that you're going to deplete to reverse the entire 10 on the revaluation surplus, and then the 5 will go to what? To the statement of profit or what? Or loss. It's very important for us to see that. Yes. Why do I have a feeling that I'll fail to do the equations? In terms of, I'll fail to have time, of course. Can we please close this theory discussion and get on to the question as soon as we can? Are you still writing? Still writing? I said already that you should be preparing your minds for an assessment. Please let us try to challenge one another. It is not good to be learning without, without doing some assessments, because that is a problem. Quality control. We're dealing with the mind here. So if the mind is not assessed, what will happen? There will be a terrible crash. All right, so thank you very much. I think this marks the end there. Next time when we meet, we are going to be dealing with the reporting financial performance, and the standards that we are going to be focusing on is IAS 8 and the IFRS 5. So I would like to encourage you at your own time to don't try to click to edit master titles. All right, so let us now get on to the revision kit and try to see if we can make some headways from there. I've got a cash generating unit in front of me here. The question says, what will be the carrying amount of the building at the end of the impairment exercise, or after the impairment loss has been recognized? Can you see this question here? It's a good thing all the time when you're going to exams to check what the question is saying, so that you don't waste time. So now we can go on top here. You can see you have been given the assets, building, plant, goodwill, as well as what? Current assets. But down here I've been given some information that might be of use. One of the machines, which is carried at 40, is damaged. Do you know what that means? Already there is an aspect of impairment allocation. For which one? For the plant and what? Equipment. You have to drop from 700 to 600 and what? Is it 660? Is it 700? No. From 200, right? From 200 to 100 and what? And 60. Please let us remember those points. Can we proceed? And the recoverable amount of the cash generating unit now stands at how much? 700 and what? 50. But the CV is 1010, or 1,010,000. Can you see that the CV is greater than the recoverable amount, and there's something wrong with that? Hello? This number is not supposed to be higher than that number. So it means there's been impairment loss that has taken place of the difference. What is the difference between 1010 and 750? Please find the difference. Yes? Two what? Two skis, yes. So that's the impairment loss you have to grapple with. I tell you the truth, there's nothing to eat. As long as the idea is there, you are going to make it. Okay? So what we're going to do here is we are going to do a CGU impairment loss. We're going to say before, or first of all, I can say detail or item. Or we can say asset, isn't it? Yes. Then we say what? Before, right? Then we say what? Impairment, right? Are you there? Then we say what? After, right? Yes. So there we go. I've got dollars here, and throughout I should be having some dollars. Are you seeing that? Hello? Hello? Okay, let's proceed. What we're supposed to do now is to help me to get the items, buildings, plant. So there's buildings, right? Plant and what? Yes. Sometimes we can miss them. What else is next? Goodwill, yes. Next. Current what? Thank you. Initially, how much was for buildings? It's supposed to be 1,000, right? So we put thousands in. Okay, interesting, you know. Let's do that. What about down here? 90,000? 200, Next. Come again? 90,000. Next? 20. So what's the sum? It was 10. 1 million, 10,000, right? Do you remember? Yes, I'll do like this. So that I have enough. Now this CGU is standing at how much? 750. You have to work in reverse order, like a witch. Have you heard of witches? No, they don't exist. When I said that last time, somebody said, we have so many of them, we can't even number them using our... No, they don't exist. I think these people, they think that they don't exist. There we go. So as we had discussed, you have to work in reverse order. Are you seeing what is happening here? Now, what are the rules? Start with the damaged what? Asset. Listen to this. What we're going to do here should tie in with these numbers which are below here. Did you hear that? It is as basic as that. And what is our target? Our target asset is buildings, right? Once we find this one, then we are done. Are you seeing that? Yes. So let's begin. And don't be too hard on yourself. What did I say? Don't be too hard on yourself. Relax. Okay? I noted that already we have got a loss already here. Which one is that? Under plant and equipment, yes. There was a loss already, right? Of how much? Of a 40, right? Let's get back to the question. 40 has already gone. So what we're going to do is we're going to ask ourselves the question, has the 40 exhausted the 2 skis? No. You understand? The 2 skis is bigger than that. So the next asset to allocate the impairment to is what? Goodwill, right? Goodwill has to go. No impairment on current what? Current assets, because these will be recovered within 1 year. Don't forget that. Now, let me come back to the two assets, buildings, supposed to be here, isn't it? The problem with Excel is that they're still developing it. It doesn't check spelling errors. Let's proceed. Maybe they've already done that. The guys in Silicon Valley. Next, we are going to prorate the remaining impairment loss on a value basis. And what is the remaining impairment loss? Who can try? It is 260 minus 40 minus what? 90. How much are you getting? Come again? 130. Good. So this 130 will be prorated on the buildings. Let's start from there. And that's the target. You're going to say 700 divided by, now notice that on the 200 we have already got a 40 removed. You understand? It's very important to know that. It's an emphasis. Actually, that's where the question becomes a bit confusing. But if we remove a 40 from the 200, how much do we have? 160. So you add 700 plus 160 gives you how much? 860. You put it there. Then you multiply. How much was your residue impairment loss? 130, right? You remember? So I was supposed to put a what? An equal sign, right? So how much are we getting? You use your calculators when you do the calculations. Yes? How much do you have? I'm getting a 106. Is it correct? Hello? Yes, it is. So we can always find the answer here. How much is your building after the impairment exercise? Can you see that number? Hello? 590 what? You do the same for, since we're in class, the machine, plant and what? Equipment, right? You say 160, right? We had removed the what? Remove the 40, right? Divided by 8 what? 8 what? 860. Multiplied by how much? 100 and what? The residual impairment loss. How much was it? 130, right? You know, the idea was that these two numbers should come to how much? 130. Anyway, I'll leave you alone. When you complete your table, you should be able to balance. In other words, when you check, the sum of all these numbers should come to how much? 700 and what? Can you confirm? If you want, that is.
I think I'm lost.
Me too. I don't have enough energy. We were targeting which asset? Are you able to see the yellow line? Is it yellow? I'm not very good at colors. It doesn't add up. It's not adding up.
The reason why it's not adding
Or it's because of this.
rounded off.
It's rounded over. So why? Let me just check my. It's coming to how much? No, it is too much. It's too much. So let's try to check what could be the possible problem. It has to add up. Although we have found the answer, but we need to complete the table because we can't leave the question hanging, isn't it? Yeah, so here, I remember that we also had a 40, right? So we need to add a 40. I'm going to put this in brackets, eh? Hello? Then I'm going to add, my addition will be a minus. You remember there was a 40 here, isn't it? I think I left it out. So is it adding up now? Confirm. Confirm. Is it adding up? Yes, it is. Okay, so now come in with your question, madam. Where is the question? You can ask. You can ask a specific question. Because what I was saying is, we were not supposed to do the entire table, right? We were just supposed to do what? This. And we have found the answer here. But now ask a specific question. What's a specific question?
Why are we adding the 700 plus the 160 and the formula we're using?
Yeah, that's a good one. It's just basic things. I think this one, where did we pick it? The 750 and the 110, where did we pick it? Someone to help. It's on the question.
Yeah. My point.
And what was the essence? Let's continue so that we can find, because it looks like maybe we were not loud enough. Why did we compare 110 and 750? Because we wanted to find the total what? Impairment what? Loss. So what's the total impairment loss, madam? 200 and what? Now listen to how we moved now. We said these things are given, these things on this side. So there's no question on this. But you remember the rules? The rules are that start with the damaged what? Assets. Here there was a 40, right? Do you remember? This 40. Can you see this 40? Then here you get the full amount of goodwill. Goodwill has to go in full. For as long as it can be accommodated where? In the 200 and what? 60. It has to go in full. Now, when we did the subtraction, please follow through. We said 260 minus 40 minus what? Can you see this one? 260 minus what? 40 minus what? How much will you get it? One what? Let me just escape. 130, right? We said this 130 must now be allocated to what? The remaining assets. Which ones were the remaining assets? Buildings and what? Plant and what? Equipment. And now listen to this. On plant and equipment, I emphasized we are going to take too much time. What did I emphasize? We have already removed the what? A 40. So we can't be running with 200, right? We'll be running with how much? Are you seeing that? Now, maybe before we go even further, because we are going to finish explaining, where is the question again? Ask again.
No, I've got it now. I was wondering why you were adding the figures.
Which figures was I adding?
Well, 701.
Oh no, I was just trying to check whether, because I think we were just trying to check whether the table is what? Correct. Actually, we had already found the what? The answer. We're just trying to reconcile the table. But anyway, because you have asked that question, let us do a similar what? Question, so that we can see how it moves. Yes. I've not finished. Come again. Oh, the computation where I ended explaining. Okay, so here, listen to this. here on these two numbers, come rain or sunshine, you're supposed to find how much? Apart from the 40. Remember in the 64, please don't be confused with the 64. You're supposed to find a total of how much? If you remove the 40 from 64, how much would you be having? 24 plus 106. This number is the one. That's what the point is. So if you know that, then it becomes a bit easy for you to see. The reason why we have brought back the 40 here is because it was already there in the question. So I don't think that there's much to say here. Anyway, let's now see if we can do a different question, madam, there, so that we can take the point home. Because let's do this one. Which question number is this? Question number 43, right? Hello? Are you ready? I am questions. I am because my questions it will be easy for you to survive the exams. So what is the requirement? At what amount should the property be measured using the impairment following the impairment review? What are we targeting here? Check. Property, right? So you're going to help me. What I'm going to do, I'm going to wrap. I'm going to amend this. Now you should be attentive. Repetition is very good, right? It's a good teacher. But be attentive to what we're going to discuss just now. So give me the first asset. Come again? Next? Come again? Patent, yes. Patent. Next? Property. And that's the target, right?
Yes.
Next? Plant and equipment. Yes. Next? Net current what? Let's give me the figure for goodwill.
3 million.
Next, patent.
500.
Next, property.
10.
Next, 15. Next, how much? 2. What's the sum? Good. So you know what you're talking about there. Now let's go back to the question and check what's the recoverable amount of this cash generating unit. Standing at how much? The business actually. Following the impairment review, it is estimated that the value of the patent is 2 million and the recoverable amount of the business is how much? Can you see this number? Madam there. Pay attention. We put the 24 where? Under what? Recoverable what? Amount column there. In fact, this column, let me just do this. Here we are dealing with what? Net assets, eh? Then here we are dealing with what? Recoverable what? Value. Manvera? The rule is that the recoverable value should be the one to be considered so that we don't overstate our assets. Now let's begin and we are going to do what we are just from doing. Listen to this. There has been an impairment loss. Why? We're going to end very soon because I'm supposed to have another class very soon. There has been an impairment loss. Why? Because the carrying value of these assets is more than what? The recoverable what? Amount. Let me get back to my notes because that point, when we are saying it, maybe we should be using our own local languages, eh? Because it becomes very difficult to take the point home when you have got a big problem there with the communication. What was the thrust. Assets, check there, should not be what? Carried at what? An amount above what? Why? Because of what? Prudence concept. Now, in this case, do you see a problem here? The problem is the recoverable amount is what? 24, right? The carrying amount is what? 35. Meaning there's a loss of how much? What's the difference? Don't just master this or memorize, but you should know why we are finding this. How much are you getting? Can you see that? I hope that you can see that. Can you see that? Yes. Now, we are going to follow the rules as they were given. We were told in the question itself that now the patent is valued at how much? So that is the recoverable amount of the patent. So you bring it in here so that already there's a problem. There's a loss, eh? How much? Yeah, we have to end this class soon. I can see some people are still asking a lot of questions. What did we say about goodwill, madam? It should go out in full, right? For as long as it can still be what? Accommodated, right? Yes. You understand? Yes. So it goes out in full. So that here there'll be what? 0, right? Do you understand that, eh? Next. What did we say about current assets? Do not what? Because these are likely to be recovered within 1 year. Anyway, I'm almost there. Find the residue. The residue impairment loss now. What is 11? This was 11, right? What is 11 minus 6? Who can help us? You're laughing. Until we come back and you start saying, start going through the calculations again. So let's now allocate the 5 using the values we have. And what's our target? Property, right? The values is what? 10 and 15. What is 10 plus 15? 25. So what you do is say 10 divided by 25 multiplied by what? 5. How much are you getting? 2. So you know automatically what the answer is, isn't it? What is 10 minus 2? You don't want to answer that question. Alright, again, 15 divided by 25, right? Hello? Multiplied by the residue amount there. I've got a 3. You know what? This is 8, sorry. And this is supposed to be a 12, right? What was our target asset? Again? Hello? Are the numbers tying in? Can we ask the class? Are the numbers tying in? Are you balancing your table? Confirm, please. Yes or no? This side? This side? Okay. I think that we are safe now. Congratulations. Cash generating what? Units. There is no defense for ignorance. These things must be known. Once you know them, you get better. Okay? So if we were to use a blank page and we had this question, can you still find these things? You can do that? Yes, there's some bit, because I think for me there's no credit in doing these things. The knowledge must be transferred to the students so that when we are gone, you don't come and put a marker on the graveyard and say rest Rest in peace. In fact, for this one, if you know these things, you don't even have to attend the funeral. There's no need to attend the funeral if you remain with the advice. I see the people like crying are those who don't listen. Those are the guys who cry a lot. They cry too much because they were not listening to what was being given by the late. Can we please proceed to the next one? I'm not saying that I'm dying anytime soon. Still around. Can we please proceed? I want us to look at a theory question at least so that we can see if we can make some bit of progress here. You attempt this particular question here. Question number, where there's a theory. I'm coming shortly to discuss it with you. You can check. Just use check. Alright, so are you done? Have you answered the question? It looks like we're in Greece, eh? But I think we did this one. We touched on this one. What is your answer? You know, you need to have that courage to answer questions. The issue of hiding away, you know, you go behind here. What? If you're going to be an artist, for instance, if they ask you to perform, can you perform behind the curtain? Somebody is going to say, get this guy out of here, he doesn't know what he wants. Okay? What is important is to be courageous enough to make what? Mistakes. You understand that? Yes. Be courageous enough to make mistakes. We welcome mistakes. What's your answer here? 1 and what? 4. Okay. 2 of the following would be external indicators that one or more of the assets have been impaired. So, external information. She has gone for 1. Number 1, an unusually significant fall in the market value of one or more assets. We get that one. She's gone for 4, right? An increase in what? We talked about that as well. We talked about that. We talked about it. Whatever is going to what? Reduce the value from the external. I think evidence of what? Obsolescence is an internal. What about here? A decline in economic what? Performance, internal. Like a machine used to generate 2,000 units of products, but now it's generating only 500. That's an internal what? Indicator. So she's right. And we thank her for that. What about this one? Do you want to try out this one? A single impairment loss. Let's end with this question, and then I can rest a bit as well. The following information relates to an item of plant owned by Bazaar Company. The current value is 3 million, right? Can you see that? Yes, sir. Please pay attention. I'm just going to sort this one out. I'm just going to ask you to be on your calculators, all right? CV is, but you can be writing what I'm saying. CV is what? 3 million. You write the 3 million somewhere. Have you done that? Yes. And we have received an offer, I think, from Japan, yes. 2.7. Somebody would like to buy this at 2.7. The estimated cost of shipping, 2.7 minus 50. How much are you getting? What is 2.7 minus 50,000? Don't close, just leave it like that. It is going to be 2.650, okay? Please. 2.7 million minus 50,000 is 2.650,000, isn't that so? Please write it somewhere. Write it somewhere. Write it somewhere. And then finally, what else do you have? There is the present value, the value in use, right? How much is the figure? 2.6, yes. Now, let's get back to the rules. How much is the recoverable value of this particular machine or item of plant? The higher of the two. You remember the rules? The higher of what? So what's the recoverable amount? This is the rule here. Somebody is tired. Is it 2.6 or 2.650? Have you seen the thin difference? The difference that is there. Some people don't see the difference. I'm afraid. So it's 2.650 compared against which number? 2.7, right? Hello? 2 point what? Have you seen the process? If you're not following through, you will not be able to see the process. The 2.650 compared against the 2.7, how much are you getting as a difference? What's the difference? 50,000, isn't it? Yes. So that's the impairment loss. That is the impairment loss. Anyway, thank you very much. Let me rest a bit.